is here, and we're solving the world's problems. We got to vote on this, I think. Congress continues to debate over the budget, and our next guest had a heated exchange last week with Treasury Secretary Yellen over Social Security during a Finance Committee hearing on the president's proposal. Here to discuss that and possible bank regulation, Louisiana Senator and Finance Committee member Bill Cassidy. And there's a couple of words now. That due diligence is a two-word term that is getting a lot of weight, but also duration risk, which we were just talking about with you, and how big the problem is. And that's what got SVB. And you wonder, is it a major overhang to what we're talking about and something to worry about? Is it the tip of the iceberg?
It could be the tip of the iceberg. You mentioned Social Security exchange I have with Secretary Yellen. They got a duration risk in Social Security. And just like it's now reported, the Fed had been telling SVB years ago that they had a duration risk. For 30 years, it's been said to the Social Security folks that there's a duration risk. And I think as long as the issue is over the horizon, oh, it's okay. It's someone else's problem. It's not my problem. And then it hits hard and everything crashes. Whether it's banks or whether it's Social Security, that has to be addressed.
Let's focus on the banks today, though, just because of the situation, what Wall Street is watching. Many of these bank stocks, these regional bank stocks, are still under pressure this morning, even after everything we've seen to this point. As someone who sits on the Finance Committee, as somebody who's watching this, do you think that we've contained the contagion or not?
Oh, we don't know that, right? Yeah. We don't know what the balance sheet is. Again, I'm a gastroenterologist, but I've learned about duration risk. You have a sense that a lot of bank presidents kind of were whistling past the graveyard of their duration risk. It's clearly caught up with SVB. Presumably others are at risk. Whether or not someone's stock is really at risk, I think really depends upon how they've managed this high interest rate environment.
Are we engendering more moral hazard again? It comes home to roost. It seems like it's happening again, isn't it? Someone said that a capitalism without risk is like religion without sin. That if there's no downside, it doesn't work. It's like the federal government is always there to backstop us until it's impossible to do, I would think. Are we doing it again?
It seems as if there is encroaching moral hazard, or I should say expanding moral hazard. Because every time somebody is rescued from their sin, their investment sins, the Fed steps up. Now, what's the alternative? That's the challenge. Were we going to let a lot of very innovative tech companies, small startups, not be able to meet payroll and dispense that whole system? I think we can probably agree that would not be a good thing. As it turns out, they also bailed out a lot of folks who were personal depositors who had exceeded the $250,000 payroll. To your point, it is an expanding moral hazard.
But depositors are different than shareholders or bondholders in all of these issues. Do you think depositors should be protected, and is that the something that needs to be made explicit so that you don't continue to see money run out of regional banks?
Yes. Obviously, you see the rationale in order to preserve the strength of regional banks. Mm-hmm. Obviously. What makes it difficult is it papers over the sins of management. And management was told they had a duration risk. They didn't pay attention to it. They continued just whistling past the graveyard, and then it came crashing upon them.
When they had to sell, yeah. They were forced to mark to market on a large portfolio, and then people saw what the real risk of $1.8 billion in losses on selling a small portion. I think Andrew wants to.
Yeah, Senator, I just want to go back to the moral hazard question, which is, we keep saying we want all depositors to be fully insured, which, I think we'd all like in many ways. But I'm also curious where you land on sort of the personal responsibility issue, which is to say that we have FDIC insurance. We've told the public for years and years and years, whether they didn't listen or not, that it's $250,000. I know some families, by the way, that to the extent they have more than $250,000 in cash, they put $250 at one bank, $250 at another bank. I mean, there are ways to do this. I'm not suggesting it's the right answer, but I'm curious how you think about that.
Yeah, so if you look at an individual investor of high net worth, typically she or he has the sophistication, I'm told, a single bank can then spread $250,000 in multiple banks so that the entirety of what they do is covered. You may or may not like that, but it's legal and they could have done that. In this bank, they did not. And so are we going to rescue those people from the casualness by which they approach protecting their own assets? I don't think the American people particularly care for that, because that just tells you, again, there's no risk in capitalism, and they think that there should be. You don't want anyone to lose money, but there should be a due diligence. If you don't have that due diligence, we all know that that papers over the mismanagement of the leadership of a bank. And at some point, we got to start getting out of this situation.
Yeah, but the issue is that all I was going to say is, Senator, the customers, unfortunately, clearly are not acting as governors, if you will, or influencers over management. Clearly, we've seen that. Even the supposedly the smartest people in the room who were invested in banking at Silicon Valley Bank, you know, who have CFOs, frankly, didn't seem to see it or put blinders on.
Yeah. I mean, that was what's making this so difficult. But at the same time, can you allow a bank to mismanage its own assets so terribly and there be no consequence? Now, you could say he's lost his money, the investors lost their dollars. Yes, that's true. I can tell you the American people think that something's going on that would not have been available to them at their regional bank. Unless you have the confidence of the American people, you're not going to have a solution which is long-term.
If your CFO at SVB was 30 years old, Senator, he's never seen rising, or she has never seen rising interest rates. Fed went up 450 basis points fast after staying at zero for a long, long time. We had the pandemic, we had 2008, we had things that there were extenuating circumstances, but there's a lot of finger pointing going on right now. Kevin Warsh, op-ed piece, he's going to be on tomorrow, that we need regime change. And I don't, at the Fed, I don't think he's necessarily talking about Jay Powell. He's talking about the Fed itself, the way that the Fed manages its affairs. What would you do? Is this the arsonist trying to put out the fire?
Well, I'm a doctor. There's a saying in medicine, don't just do something, think. Now, what are you arguing about? I'm not saying there shouldn't be regime change, but at first you want to define what your objectives are. If your objective is to, oh, we don't like the way Jay Powell has been handling this in particular, what in particular? The fact that interest rates were kept near zero for so long has created a different sort of economic environment than when interest rates were typically 3%.
That's why those banks were in those long bonds. They thought they could do that. They get a higher yield. They can put it on their balance sheet. It's a treasury. There's no risk.
Now, by the way, you can't excuse it because they'd never seen, they're too young to have understood this. The first article about duration risk was written by a friend of mine 50 years ago. So theoretically, people learned about this, and they could have accommodated that understanding. The Fed was warning them. Jay Powell said, this is what we're going to do, sending that clear message. So I don't think you can excuse management. In fact, I think that's what people are upset about. The Fed's actions are currently excusing management. So if you want Jay Powell, going back to what you want him to do, you want him to let banks fail and all the depositors lose their money, then be explicit about that, but don't just say get rid of Jay Powell without saying, okay, what do we want the next person to do?
Senator Warren is criticizing the Fed that they were complicit in terms of regulation, and she's been a critic of Jay Powell for a long time, didn't think he should have been reappointed because of lax regulation. Do you think the Fed was complicit in the other way, that staying at zero allowed Congress to spend, how much did we spend in the last, and go back to the Trump administration if you want, with the tax cuts, whatever you want, because we got to mention both parties are guilty of this. But we spent a lot of money in the last 2 years, in addition to the last 6 years. Right? And the Fed was at zero. Didn't that enable all that spending?
Of course, you want to have a context around each. In fairness to the Trump administration, that's when COVID hit, and you're trying to keep businesses afloat. You may argue about it, but that was the intent, as opposed to President Biden's $1.9 trillion bill, when clearly the worst was passed. And by the way, his pause on student loan payback continues to inject $5 billion a month into the economy, which is obviously adding to inflationary pressure. Now, if the Fed is given an expanded money supply, they're trying to back off of it, and one of their few, they got 2 or 3 tools, they're trying to employ them, and things turn upside down. That's kind of what's going to happen when you start trying to subtract.
They're playing us out. I had one more really important question about how GERD can cause wheezing. Do you know GERD can cause wheezing?
Absolutely.
Can I talk to you? You're a gastroenterologist?
It's very
Stay
easy.
where you are right now. We're going to go to break. But I thought, I'm breathing fine. Why am I wheezing? It's GERD. It's GERD. I need Prilosec.
You need a good gastroenterologist.
I do,
Yeah.
but you don't do that anymore.
I don't, but I can find you one.
Okay. Thank you. Andrew, you got any health problems? He's a gastroenterologist.
I'm
Acid
I'm
reflux.
trying to avoid them. Trying to avoid them. Thank you, though. Thank you, Senator. Thanks, Joe. We come back with the shuttering of Signature Bank and